Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES continued to balance within yesterday's range, with sellers being more dominant for most of the session. But overall, the market is balanced between 70 and 78 in this range. And at this point, the bias is neutral because a break of that range will actually tell us which side is really in control. And at this point, with no real major catalyst on the day time frame, the market could either continue to balance or actually reverse back up towards 80.75 and 82.75 to 84.75 if we can get back above 74.5 and start stabilizing, or if the momentum actually really comes in on the downside and the market continues to hold below 74.5 and continues to test 70.72, then we could break on the downside and then get a directional move down to 63 to 65 and potentially 57.75 to 59.75. Now, because we don't really have any major catalyst to drive the market big one way or the other, in the event of a downside break, we can still expect responsive buyers to be active at support. That would be 63 to 65, and especially first test of 57.75 to 59.75. The strong support zone still has potential to cap the downside and shut off the selling, and then push ES back up towards the 68 to 70 area, kind of back up towards the lows over here. So off the open, we have to be cautious technically in both directions because the market could still go, break 76, 78 or break 70, 72, right? The market's just range bound over here. The other markets have been weak, but are also testing some support and are kind of in a similar situation where buyers can still step in at the support areas, or we can see a continuation down and then we get a buy response. So at this point, because the market is so range bound and stuck in a range, we do have to be careful with trade location. But over the last few weeks, we've seen a bit more selling in the market. So if anything, I would be leaning more on the short side, but I do want to see some momentum off the open to confirm that idea. It's not a matter of just selling every pop, relying on the recent trend to basically continue and take hold, because at this point the markets are very balanced, and we could see a move back up towards 80.75, 82.75 to 84.75, and then the market just starts balancing within that range. Again, there's no major catalyst to really drive the market big one way or the other. The FOMC meeting begins today, and the announcement's tomorrow, so the market's also kind of waiting on that. And for that reason, it doesn't really, the current context doesn't really support the idea of a big trend day, right? Now, if we break 70.72, we can still get a directional move down to 63.65 or even this strong support zone, but that doesn't mean that it's a trend day because we expect buyers to be active at those support zones in the event that the market does break lower. And similar idea on the upside, if we break 76, 78 to the upside, we can still get sellers on first test even as early as 80.75, then 82.75 to 84.75, and this 87.5 to 89 zone would be a bit of an extreme, and that zone has potential to cap the upside, to shut off the buying, and that's a spot where sellers can be a bit more aggressive. So whether we break to the upside or the downside, the idea is that the upside movement will attract sellers, the downside movement will attract buyers at support, with 57.75 to 59.75 really being the key spot. Because the recent trend has been more on the downside, we'd rather focus a bit more on shorts unless we're seeing some pretty clear buying activity come into the market. So those are the main ideas heading into the open. Again, keep an eye on the 70.72. Overnight sellers have been more dominant, and if this zone goes, then we could get a directional push to at least 63.65, with maybe a little bit of rotation along the way. So those are our main thoughts heading into the open. Let's see if the sellers can really, come and put in a directional push lower, and we'll take it from there.